Welcome everyone, and thank you for joining in as we're starting to wind down our series on the retiree. This week, Brandon and Brice join us and they talk about a really unique strategy of qualified charitable distributions. Stay tuned till the end to win some FSG gear.
Hello friends, Brice and Brandon Carter with Financial Strategies Group here for the 10th episode of FSG Financial TV. Today we're going to be talking about qualified charitable distributions. I think it's more important than ever to learn about this particular strategy. I mean, with the new tax code, this is big. So, view from 30,000 feet, what is a qualified charitable distribution?
Yeah, qualified charitable distribution, otherwise known as a QCD, is a tax law that allows you to directly transfer funds from your IRA to a qualified charity. And it avoids your tax return altogether. So typically a distribution from an IRA would be a taxable event. It shows up on your tax return, increases your adjusted gross income, all those types of things, which can cause Social Security to be taxable and all sorts of bad things. What actually allows you to avoid that completely and give directly to the charity.
So essentially, instead of taking a distribution and then writing a check to your church on Sunday or that local animal shelter, whatever organization you support, you avoid the process of taking the distribution and writing the check by just having the distribution go straight from your IRA to the nonprofit.
Correct.
Right?
Yes.
And the main advantage of that is that it never shows up on your tax return.
Correct. Well, and it's even more important now. So I guess we should take a step back. The QCD rule was made permanent in 2015, which is a huge step. And then last year we had the big sweeping tax law changes.
What is it? The Tax and Jobs Act of 2017.
That's right. So
TAJA.
So with that law, the standard deduction was doubled. So it went to $12,000 per person. What that means is those who are giving to charities do not get the tax benefit for giving to the charity if they don't itemize.
Well, yeah, I think we might have to back up there. Is charitable deductions are still, charitable contributions are still deductible.
Correct.
But you have to itemize on your return. It doesn't make sense to itemize unless your itemizations are greater than $12,000 for an individual, roughly, right, or $24,000 for a couple. So you could be giving to charity and not getting the deduction for it.
$10,000 a year, and if your itemized deductions don't exceed $24,000, you don't really get any extra benefit for that.
So when you do a qualified charitable distribution, basically money sent right from your IRA to a nonprofit, because it never shows up on your tax return, it's like getting the deduction.
Correct.
Without having to itemize.
Well, think about it this way: if you're already giving to charity, and you're already required to take a distribution. That's a term we haven't talked about yet, the required minimum distribution, or RMD. But if you're already doing those two things, you are giving to charity, not really getting much of a tax benefit for it. So why don't you just take your required distribution, give it directly to the charity, and actually still get a tax benefit for it? Because somebody's got to pay taxes on that IRA money at some point.
I hope you're all enjoying our trivia questions. This week's trivia question is, according to Forbes, what was the largest U.S. charity in 2017? Was it A, Salvation Army, B, Feeding America, C, United Way Worldwide, or D, YMCA of the USA? Stay tuned for your answer.
All right, so let's talk about RMDs for a second,
talk about those.
Which is required minimum distribution. Yeah. At age 70 and a half, you have to pull money out of your IRA.
Correct.
You have to. You don't have a choice. It's required. They don't care what you do with it. They just want you to pull it out, pay taxes on it.
They want you to pay taxes on it.
That's exactly right. That's it, right? So if you are required to pull money out of your IRA and you already give to charity, there is no reason whatsoever you shouldn't be doing a qualified charitable distribution that I can think of.
Yeah, so that's, again, with the RMD, you have to be RMD age in order to do a QCD. So QCD only can be done once you're 70 and a half.
Okay.
So that's something we should definitely throw out there.
Yeah.
You can do up to $100,000 a year in a QCD, but if your required distribution is $10,000 a year and you already give $10,000 a year to charity, you can do a $10,000 QCD, and then you no longer have to do your RMD.
Right.
So if you're one of those fortunate people that doesn't really spend their RMD, You can do it right to the charity. You don't have to worry about paying taxes on it.
Yeah, absolutely. That makes amazing sense. I think that the problem is that this is not really that well known.
Yeah, it's because it's so new.
Yeah.
2015 was when it was made permanent. You were allowed to. We knew going forward we're going to be able to do this.
Yeah.
And then especially with the the standard deduction increase,
Right.
so many more people are no longer going to be itemizing.
Right.
And if you're not going to be itemizing, then you're not going to get an extra tax benefit for giving to charity.
So the because the standard deduction is increased, I mean, it's a good thing. You're going to be
It is a good
saving.
thing. Yeah, right.
You're going to be saving on taxes if with that big increase. But the problem is you still want to get credit for those.
Right.
That's not why you give, but it's a nice bonus of giving is to get to that deduction.
And if you're not 70 and a half, there are some other strategies you can look at, like at the end of the year, you give your regular giving to your charities throughout the year. At the end of the year, write a check for what you would have given the following year. So you kind of double up in 1 year.
It's called bunching. Bunching your gifts.
Bunching your gifts.
But
it's the moment you've all been waiting for, the answer to this week's trivia question. Again, this week's question was, according to Forbes, what was the largest U.S. charity in 2017? Was it A, Salvation Army, B, Feeding America, C, United Way Worldwide, or D, YMCA of the USA? The answer is C, United Way Worldwide. United Way was established in 1887 in Denver, Colorado. Their mission is to improve lives by mobilizing the caring power of communities around the world and to advance the common good. Make sure you stick around for a chance to win some FSG gear.
Yeah, I think the QCD thing is something that's very profound. If you are over 70 and a half, you're taking RMDs, you give to charity, you need to really take a look at this.
Give it a hard look.
Absolutely. Yeah. And that's what we're here for. Now, you wrote an article about this. It's on the website. It goes through a little bit more details, perhaps.
Absolutely, yeah.
And I think it's something that's definitely worth a read. So,
additionally, Social Security benefits can be taxable if your income's above a certain amount.
right.
Your Medicare premiums, what you pay Medicare premiums, increases as your income goes up. Doing the QCD, rather than taking the distribution or writing the check to a charity, actually reduces your income number so that you could reduce what you're paying in Social Security taxes. You could reduce your Medicare premiums.
I mean,
so
there's a lot of
other benefits to it as well.
Yeah, so and you talk about that a little bit in the article.
Yep.
So I think it's definitely something that you need to be thinking about if you're over 70 and a half.
Absolutely.
So that's going to wrap up our episode for this week. Be sure to like and follow the page and take a look at the article. It's on fsgmichigan.com.
Love to hear your comments. Feel free to message us on our website or send us an email.
Have a great day.
Thank you.
Hi everyone, and thank you for joining us throughout this episode when we have learned about qualified charitable distributions. We believe it's always good to give. Make sure to shoot us an email of your favorite takeaway from this episode, and we might just send you some FSG gear. Our email is contact@fsgmichigan.net. You can also give us a call if you want some more information or would like to meet with one of our advisors. Our phone number is 800-804-0420. Thank you for tuning in, and we hope to connect with you soon.